every company you invest, we need to check what kind of a company you are entering, right? So there are multiple categories of a company. So whatever we are going to discuss now, it's not that you will be understanding or you will be able to categorize every company based on this category. But yes, as you have more experience, as you practice more, as you are more into the market, look at lot of companies, the opportunities, you will be able to bifurcate them. And yes, once you get this information, whenever you're picking a stronger stock, you will get to know whether this can be added into your portfolio, either into short term or long term. You will get a clarity. I want every one of you to have a principle or have a thumb rule in your investing. So, short term means any investment you are doing it for less than 1 year, wherein it can be your intraday trade, it can be your swing trading. Intraday, you buy and sell on the same day. Swing trading means you buy and you hold for just a couple of days, maximum 1 week, 2 weeks, 3 weeks, like that, right? Swing trading. Momentum investing. Momentum means, yes, you pick the momentum of a stock. There is a particular sector or there is a particular company. It is in a high momentum. It is in an upward increasing trend. So you take advantage of that trend. Defense is one trend. If it is in an advancing trend, you take advantage of that and you invest in that. So that is called as momentum investing. As long as the momentum is there, you participate and you exit. Next, you have your positional investments. You take an investment and you hold it for 3 months, 6 months, 9 months, 1 year, like that, right? So this is called as positional, where all of these things come under short term. You look at the fundamentals of the company, you look at the earnings growth of the company, and you wish to hold that company for 3 years, 5 years, and above. These kind of companies form under your long term. So the principle or the formula I want every one of you to remember is give a bifurcation. Short term, have 30% of your portfolio into it. Long term, 70% of your portfolio. So if anyone are beginners, if anyone are starting fresh, for you, sir, I don't have a portfolio at all, how to bifurcate? This should be your target. This should be your portfolio which you should lay out a structure. So yes, sir, 100% short term, that is not how the market will move, right? That is not how the market will move. Rather, you have to play it in either baskets, because there are many investors, as I see, and that is a very good way of doing it. Sir, out of my entire portfolio, 30% into short term and 70% into long term. So whatever profits I generate from the short term, those profits I invest into long term companies and I hold it for long term, right? That is a wonderful way of doing it. And if there are few investors, sir, I'm a very aggressive investor, I want to play more in the short term, I have more screen time, I wanted to learn new concepts and get that thing, maybe short term you can increase to 40% and long term 60%, right? This bifurcation everyone should have. Investing everything into long term or investing everything into short term is not ideal. There should be a balance of both. Okay, so now what we will study, we'll be looking at company categories, right? So what is the exact importance of dividing the companies under categories? So first of all, when we look at institutional favorites, so yes, any company which you are tracking, for the FIIs or the DIIs, foreign institutional investors, FII, DII, domestic institutional investors, what are the things where they look into, right? First thing, they look at quality of the company, right? Quality leaders will be picked, but beware of official growth stocks, right? So what do I mean by this? See, institutions will be giving more importance to quality companies, and that to leaders in that segment. And for an institution, they can't enter into a penny cap or they can't enter into a small cap stock because of the restrictions they have. There is no high float, right? There is no outstanding shares for that company for them to take an exposure. So once a quality company is identified, they take exposure into it, and do not get stuck into stocks which are like growth stocks. So yes, there are people, sir, yes, this is a growing company, but this is not the leader in that segment, right? Leader in that segment. So that can be a good company, but institutions to enter, they look at high quality companies, right? As we discuss further, you'll be understanding, and even we'll be doing a screening also, right? In the preceding session, we'll be doing a screening of these kind of a companies. Then liquidity. The reason I told you penny cap or small cap companies, institutions can't enter because of the liquidity issue, right? Because of the liquidity issue. So if you have a company, sir, it is a penny cap stock, it is a small cap stock, very high performing company, high quality, but check how many are the outstanding shares of the company, free float shares. If there is no liquidity in that stock, institutions can't back up that stock. And yes, the kind of a bull run may not be highly possible for this kind of a small cap or even a penny cap stocks. And yes, companies which are mostly widely followed, and if you see any sector which is coming into the radar, or even any stock which is continuously coming into the radar. So sir, what do you mean by radar? Radar means a stock which is continuously performing well, and where institutions are picking, and there is a news about the company where there are more orders which are coming. So these companies will be invested by the institutions. And yes, markets. People ask me, sir, should I enter only into bull market or in bear market? I would say market gives opportunities for everyone in every market, right? So in a bear market, you get good opportunities of quality companies which are like low hanging fruits, right? Low hanging fruits. So yes, even in a bear market, you should do your homework and get prepared for the quality companies. And lastly, people tell me, sir, it is a good company, but still it is not increasing. Sir, this is a company which I love because I'm following it for the last 20 years. Please understand, in share market or as an investor or as a trader, if the share price is not increasing, don't call it as a good company. The company can be good for the employees. The company can be good for the additional amenities which provides. But yes, as an investor, call a company good company only when the stock price is increasing with all the other factors, right? So yes, this reaffirms that date a company, but do not fall in love with a company, right? I hope everyone are getting the point of taking the harsh truth in a realistic manner, right? So, sir, the company is good, company is increasing, there are new projects coming, the promoter is good, shareholding is good, all are good. But if there is no share in price increase, that's not a good company. Somewhere there is a problem, right? Somewhere there is a problem. And yes, cyclicals, we have discussed in the earlier session as well. So a company which is a cyclical company, play in it under a short term, right? Companies into steel, cement, sugar related companies, right? So these companies sell discretionary items that consumers can afford to buy more in a booming economy and will cut back on during a recession, right? So yes, during a recessionary period, when there is high interest rate, and as the interest rates are very, very high, the home loan rates also will be very, very high. So people will not show interest in purchasing a new properties, taking a new loan. And even the demand for steel, the demand for cement also may come down, right? So these kind of a cyclical companies, what I want you to understand is, don't allocate more positions into cyclical stocks for long term. Play it under short term, where during the uptrend you enter, and whenever you observe that there is a downtrend and the cyclicality is changing, you exit out of it, right? So, sir, there is a strong cyclical company which have done a lot of analysis, and can I add it into your long-term portfolio? 1 or 2 is fine, but don't allocate more into long-term. So what is long-term, which we have discussed right now? 3 years and above, no cyclical companies. You should have only very few, because you don't want to have a abrupt change in your long-term portfolio where they suddenly fall. No, that is for us to compound. Those are like compounding machines for us. And then turnaround situations, right? In the company categories, like institutional favorite companies will be there, cyclical companies will be there, turnaround situations. So these are some of the companies wherein there is a change in management, right? There is a change in management. Earlier it was a good company and now it is recovering because of new promoters entering. South Indian Bank, when we have discussed about that company, earlier it had that asset quality problem. There are a lot of NPAs, non-performing assets. Now the asset quality is improving. There is a new CEO which has taken over the realm, right? So yes, he is heading, and we need to see how interestingly he'll be handing over, right? So yes, South Indian Bank is one of the turnaround situation kind of a company. CEOs, yes, new CEO for South Indian Bank. Let's see how he will be able to switch the performance of the company, or how he will be able to lift the business and take the company into a new trajectory, right? Into the new trajectory. And yes, recovering fundamentals. If the company's performance is improving, if the profit after tax is continuously improving, there is a company, right? This is for someone wherein, sir, I want to look at certain businesses wherein it has not performed very well for a very long period. I just keep into my radar, right? So yes, as the company did not perform for a very, very longer time, now I will enter, so that I'm entering at a low levels is a wrong way of doing it. Rather, sir, the company is not performing very well, it has continuously fallen, and I see a turnaround situation there, right? As a new CEO coming, or even the company bringing out new products, the fundamentals of the company is increasing, the sales is recovering, right? In that kind of a stock, as you track, take small positions and invest. That is ideal, rather than as the stock has fallen down, I will invest. That is wrong, right? Even Suzlon, yeah, Suzlon is one company where it is retracing back, right? Retracing back. And yes, if the company has a refocused business strategy, and once you understand it, that can be a very good player in turnaround situation company categories. And yes, margin improvement. I want every one of you to track South Indian Bank very closely, because the kind of a profit after tax packs they will be generating, once the book quality will improve, this can be a turnaround situation company, right? And yes, market leader, I've told multiple times in all our discussions, whenever a company you see as a true leader in a market, whenever the bull run starts, these are the companies which we will be picking up fast. And yes, market leaders, there will not be too many. They'll be like very few businesses, handful of companies, right? Will be there, right? Very, very few companies. And yes, so when Warren Buffett, right? He's one of the favorite company in the soda business is Coke, right? Is Coke. And if you speak about that segment, the third and fourth company or the fifth company, it will be very, very difficult for you to recollect what are those companies. So yes, market leader has always that advantage, right? Wires and cables, you have your Polycab, KEA. These are some of the winners in that segment. There are many companies, right? But yes, market leaders always demand, and these are the companies wherein we see a very, very good improvement, be it in sales, margins, earnings per share, and relative strength. You know how to check the relative strength of a stock. When you load the company along with Nifty 50 benchmark, these are the companies which have a very strong relative strength, right? So the market leaders possessing a very good strength will be one which will be picking up very fast during a bull market. And apart from the market leaders, you can closely track on the competitors. What are the next companies which will give a tight competition for this market leader, right? So yes, number 2 and number 3 companies in the segment. And any company which is a competitor and trying to move beyond the market leader can be a very good opportunity also, right? Opportunity also. So here there is a thin line, guys. Don't be too aggressive. Sir, yes, market leader is there, which is very strong technically and fundamentally, but I see the competitor, which is also giving very good reflection. So entering into the leader is preferable than the competitor, because competitor may face a lot of challenges, right? May face a lot of challenges. So yes, this can be invested by entering into tranches, a smaller investment. And as it performs, as the quarterly results or the technically it is showing strength, then you can increase the allocation into it, right? Allocation into it. And yes, always remember, stocks move together, right? And this is one very important point. Whoever know how to create a watch list in your trading view with a complete on a sector, right? Yes, go to your trading view, create a list of all the defense basket stocks, right? Create a list of all the hotel related sector if you're tracking it. And yes, when these companies move together, everything will be moving, and that is the trend you need to be in, right? You need to be in. And yes, the difference between a competitor and the leader is they just lag in performance and fundamentals. Once that is picked up, these will be doing well. Yeah, this will be doing well. And apart from that, if you see Amazon, right? This is one of the example. I just wanted you to digest the concept. Amazon, when they have started, right? They were not into different products. They have just started with a book distribution. And yes, as they have given competition for few businesses, they were able to compete with the leaders. And yes, now they have become as a giant, right? They have become as a giant. So competitors, you can focus, but be very, very careful. Your first priority is to enter into a market leader. And yes, lastly, let's discuss about leaders and laggards, right? Leaders and laggards. So who is a leader? A leader is a company where they have a strong growth. Their revenues and earnings per share will be increasing. It can be a quarterly increase. It can be a yearly increase in revenues, sales of the business, top line of the business, all are common words, right? If a company is increasing in sale, if it is reporting that in a report, the revenues of the company is increasing, the top line is increasing, means everything are the numbers, revenues. It's talking about revenues, right? And yes, leaders will be having a dominating market position, and these trends continue really for a very, very longer time. And yes, that's the reason whenever we keep a market leader into our portfolio under long term, we look under weekly and monthly charts, not under daily, right? And the reason to pick strong structural companies rather than cyclical companies is scalability, right? Business model should be scalable. I want every one of you, I know there are certain terms which we are discussing. If it is little difficult also, it's fine. Accept the friction, accept the things that you should feel uncomfortable certain times. So that is a reflection of your growth, right? So scalability means you have taken a position into a stock, and yes, that stock, they can increase by establishing new plants. They have a vision that they'll be coming out with new products, and over the period of years, maybe 3 years, 5 years, 10 years down the line, they have a plan how to grow. These businesses are scalable businesses, right? Any business wherein they do not know where to keep their profits earned, or they just distribute back to the investors in the form of a dividends, and they're restricted. Yes, this is the capacity, maximum capacity we do, and in the next 3 years, 5 years, we do not have any thoughts of expanding our business. These are not in a scalable kind of a business model. I repeat, scalability means the chance of the companies or the vision of the company is to expand, is to see in a growth model, right? That is called as scalability in a business model, right? I hope everyone understood the term scalability. So yes, if you are looking at a stock which is like a leader, right, or even the best candidate, they should have an expansion in their business model, right? Asian Paints, do you think it has an expansion in the business model? Yes. Varun Beverages, yes, it has an expansion, right? Your KPIT, your PA Industries, right? Varun Beverages Limited, right? All of these companies have that expansion in the business model, right? They can expand. Even CDSL, if you see, for a CDSL to expand, they just need to add more servers into their segment, right? So companies which are scalable for long term are strong candidates. ITC Limited, right? Cigar business, if government comes and imposes heavy duty or heavy tax on it, that's fine. They expand on their hotel business. They expand on their paper related segment. They expand on their food business. So scalability is clearly visible in all these segments. So these are some of the best candidates. And now, yes, let's learn about worst candidates, because we need to know what are the traps which we should not fall into, right? We should not fall into. So some of the worst candidates are eroding industry position. If the market share is coming down, if their leadership, if their penetration in the market is coming down because of strong competition, these are not the stronger companies which we need to be in. These are laggards for you, right? Limited pricing power. So they can't demand the market, right? Even one of the example here, if I want to give you ITC, right? ITC have a limited pricing power in the cigars business, right? So yes, even if they make one cigar as 100 rupees, government will immediately come and say the tax on it is 80%, 80 rupees they'll be taking away, or even 90% they can, because it's a heavily regulated company and the pricing power is very, very limited. They can't increase drastically. Even they increase, they can't take that benefit. So as a stock ITC, the cigar business, whatever they have, is like not completely dependable kind of a business model. And that is the reason even the ITC has been in the market for a very, very longer period. It was not like a continuously improving or a growing business for many number of years. But last 1 year, their management has identified, just depending upon only cigar business or focusing only on this, we are missing a major market. So that is why they are diversifying, and now they are firing in all the other segments, right? So you should know the difference. If ITC has been only restricted to the cigar, they would be a laggard or they would be a flat kind of a market, right? So this example I'm giving not only for ITC, any business. So if you see a company, a chemical related company, a chemical related factory, wherein it has high influence in the environment related, right? Pollution related. If they emit or if they give a lot of pollution to the environment and it is governed by certain regulatory bodies, anytime it can backfire the companies, right? So you should be looking at these things. Heavy regulated company can be under problem. And lastly, margin pressure, right? Yes, the company can increase its prices, but if it does not take the benefit of the increased margin, there is no use in it, right? There is no use in it. So margin means sales is improving. Parallelly, expenses are also improving. If the margin is the same margin, what is the advantage, right? So margin pressure is there. Those are the companies which will be like laggards, right? Which will be like laggard. So yes, whatever we have discussed today on the company categories, I want every one of you to bifurcate or look at the stocks in this is it an institutional favorite? Is it a cyclical company or is it a structural company? Structural means scalable kind of a business. Is it a turnaround situation? Yes, any company wherein it's bouncing back, it's having a U-turn, right? Is it a market leader? Is it a competitor? Is it a leader or is it a laggard? If it shows any indication that it is a laggard kind of a company, you should either reduce the position or you should look at coming out of that stock as early as possible, right? And just do not worry, someone who are a beginner or non-finance background or just learning to understand these categories in a first shot, it will be little difficult for you. But as you get experience and as you have this kind of a mindset, you'll be slowly coming to that point, right? Just look at more companies, study more companies, right? Just follow our discussions as we discuss the theory along with a lot of practical concepts. I'm sure everyone will be there. Okay.